Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:38 p.m. on a rainy evening here in the New York, New Jersey waterfront. It is April 15th, which is officially the Uncle Sam's Grab Your Money tax day. But the actual tax date is actually April 17th because of the fact that 15th falls on a Sunday. This is a free market update webinar, getting members and all members and traders and investors set up for the coming week and the following weeks. We are going to put some precision updates here online, and session will be recorded, uploaded to the Clueless Trading YouTube channel, which is available for anyone out there, member or not, to visit to learn the actual facts, the real news, not the fake news about what happens in the US and the global financial markets, specifically the US markets that we trade in. And feel free to spread the word out to the lost masses out there who, in general, have absolutely no clue what the markets do, what they do. And we are here to basically provide all the dissect all the news and put together a framework that one can trade and profit from. It's really as simple as that. That's what we do at Clueless Trading, and the motto is tactical trading. Tactical, not emotional trading, leads to overall profits in all types of market, up and down, as we also have seen consistently. We have produced some terrific results in both up markets and down markets. In between severe volatility, that is a constant. Like we like to say, embrace volatility and you shall prosper. You fear volatility and keep on hiding from it, then you're never going to get anywhere. It doesn't matter if the markets are up 400 or if the markets are down 700. And we've seen that happen repeatedly. That's it. Full disclosure, this is purely for financial education and not for any solicitation or advice. So we shall begin. So first of all, we are living in, we have always lived in, but now more so in enhanced drama, whether it be political, whether it be economic, whether it be global. We're living in times, which has always been the case, and more so now in times of extreme market news and events that are happening very, very quickly. Keep in mind that we are living in times, I've said this for years now, and now you guys are seeing it in fruition, of massive technological movements in the form of very fast markets, known as algorithmic high-frequency trading. These are supercomputers known as black boxes, which tend to react to noise, which is external news in the markets, whether they be economic, whether it be corporate, whether it be political, and they react on them immediately. So what normally happens in weeks and months are now happening in hours and days. We've seen that too repeatedly. So start to accept it, and this is the norm. The machines generally control 80 to 90% on any given day of trading that occurs in the markets, and even though the fundamentals eventually dictate what happens over the short and intermediate term, it is the machines which control the dynamics, what we call technical and tactical trading. Clueless Trading here specializes in tactical and technical trading with a heavy concentration and background analysis of fundamental news and analysis. You've seen that. My job is to provide the tools, the forecast, the analysis of what all these events and news are, put together in the form of visual charts that any trader out there, whether they are new or novice traders, amateurs, or advanced traders, can take advantage of. These are roadmaps which are extremely powerful, very accurate, and with a little bit of practice and actual involvement in the markets, not sitting there being a spectator, but actual involvement in the markets. It doesn't matter what type of capital you're trading with, to be honest with you. Small accounts can grow 60, 70, 80, 90, 100% in a matter of days, given the very tactical precision trade alerts and the forecasts that are put across. All it takes from your part is to be focused, try to understand the dynamics of these charts, and act. Because if you never act, you'll never get the results. It's really as simple as that in life as in, and in trading. So that's what we're trying to do. Here's a couple of broad points here behind you as I speak. You see actual real-time representation of the S&P 500 futures, which are now gapped open, which gapped open about 18 points. Now are up about 15. And we're going to go through all that. But here are a couple of broad points here. This was a very eventful weekend. President Trump, in my opinion, scored a massive diplomatic and military victory by making a point. We are not in the United States. We're not in the business of getting into foreign wars. Even we have done many times as a superpower. That's the nature of a superpower, to get involved in foreign conflicts to protect our interests and the interests of our allies. The fact remains that what he did over the weekend, in my opinion, was absolutely perfect. This was a surgical strike, a tactical strike that I praised everyone off prior to it happening, and then along the way, when it took place on Friday evening, Saturday, and it was over. Friday evening, when it took place, and which was April 13th. It was basically a 2 to 3 hour surgical strike, cruise missiles and such, which hit chemical depots in Syria, and it did not accelerate. And that's the key point, or else you would not be seeing futures up 15 points and probably will be up substantially higher, or remain at the same levels by tomorrow morning, barring any other type of external extraneous events that take place. We wouldn't be up at these levels, which I predicted we would be up anyway, if this strike wasn't surgical and if there was an acceleration of hostilities. There's a lot of things that happen in the world of international diplomacy, international military conflicts, that many of you cannot understand, because many of you are not really passionate followers or do not understand the layers and the nuances of international conflicts. So you might think, oh, they're bombing, everything's gonna fall apart. No, it doesn't work like that. Okay, and there's a lot of things that happen behind the scenes, which you and me are not privy to, but I can assure you there's a lot of stuff that happens where they're talking to each other while these things are going on, which are designed to contain and minimize the conflict rather than spreading and turning into a full-scale World War III type of situation. Ain't gonna happen, not happening. So congratulations to President Trump for doing a fantastic job with cooperation, with the advice, I should say, of the terrific generals, General Mattis, or the other generals who basically coordinated the whole move. So that's number one. That's a positive. I also posted some very powerful news before this event took place, before the bombing took place, and that is, and you guys should be aware of it, because one of the things about trading is obviously your mental cognitive preparation. Now, I'm not trying to make you guys into some sort of foreign affairs gurus and things like that. Some of you obviously understand a lot of these things which happen and can understand the nuances behind it. But the more informed you are, the better off you're going to be with your trading, because that is going to help you stick to these very powerful, very precise technical charts that are taking place, and you'll be able to minimize the noise, which is the external news that keep on hitting us throughout the day. Stick to the charts, keep your cognitive bias on a short-term basis to where the markets can go to, and this way you don't keep on flinging yourself out of the boat, i.e. out of the positions, and constantly keep on missing terrific trades. We have seen that happen over and over and over again, and I can assure you a significant amount of members and also a significant amount of traders, retail emotional traders as I like to call them, I should coin a term, RET, retail emotional traders, who keep on constantly missing out on absolutely amazing trades, both on the long side and the short side. Okay, and the way I look at it, it's like a Zen diagram where you're in a trade, you get in at the right time, and then you flip yourself out because of the noise and the volatility, which is shown in the form of these type of back and forths, candle structure, lose sight of the bigger picture, where we're going, and then you see it going exactly to where I have shown that it's going to go, whether it be the market or individual stocks. And this is a constant repetition. I would say a tragic repetition by retail emotional traders over and over again. And the problem is not that one shouldn't be fearful and scared at certain times. I'm scared at certain times, but I use that as positive reinforcement of what I need to do rather than a negative reinforcement of repetitive mistakes. Okay, so what happens is, if when you keep on doing that over and over again, your brain becomes mush. You sit on the sidelines. Even though you got in at the pretty much at, let's say, at some decent levels, you're constantly getting thrown out. You miss out on these type of monster breakout moves. And then you don't buy these because you probably got in around here. You bailed out around here on this minor 15-minute drop on the market, because you're not focusing and because you're not mentally calibrating yourself. I don't know what I mean, I do know exactly what retail traders do, and then you miss this out. You're like, oh God, this goes on, and you don't buy it here, and you keep on doing the same thing over and over and over again. And yet the market keeps on climbing, and it's eventually going to get up to this 27.10, 27.20 level on the E-minis, which is roughly about 27.30, 27.50 on the S&P 500, which closed at approximately 26.56. Down about 8 points on Friday. So the market will be up roughly about 100 points, which translates into 700 points, probably within a very short 2-week span or so, and you'll miss the whole thing over again. This is a very sad story. There's nothing I can do about it. All I can keep on doing is trying to help as much as possible, so that hopefully some of you eventually, do change the repetitive mistakes that you're doing over and over again. And many of you are not doing that. Many of you are trading correctly, and doesn't have to be every single day that your P&L has to be green, but overall you have to judge your P&L, your profit and loss on your accounts, I believe, on a weekly, monthly basis. I know it's hard to do, because a month might seem an eternity when the markets are in a volatile state, which it always will be, just so you know that. And but that's really what needs to be done. You need to look at your P&L over a weekly to monthly format instead of looking at it to see whether you're up on that particular day. Because the best setups are when you're down on your P&L on a certain day and you have set up the trades, and then you enjoy those massive moments that we have seen repeatedly where the markets open up, stay up, and you basically sell at will, or what we call shooting fish in the barrel, because you were in the trades at these very powerful moments, this particular one being the inverse head and shoulder back on the 11th of April, just a couple of days ago. And and then when these type of things happen, you sell here, you sell here. You just have your right to sell wherever you want because you are very nicely profitable. So gap opens are like that. If you're not in there before the gap opens higher, you are just, you're done, because you can be, it might gap open and the market might trade for sideways, right? This is where we are right now. And we might be moving sideways. And and you won't have a chance to get in. And then the market will probably pull back a little bit during the day. And people like us who were buyers here, we will be selling the gap open, and then we'll be waiting for some re-entries. While you'll be just, I don't know what you'll be doing, what the RET, or retail emotional trader, will be doing. So it's a frustrating experience. So if you keep on doing this over and over again, that some of you are doing over and over again, your brain becomes mush. You are SOA, sitting on you know what, and you just feel that your ability to make money in the market is completely decimated, and it's very sad because your ability is not decimated. It is you who are forcing yourself to constantly lose money, or even when you're in a trade at the right and enter at the right time, you're just selling out because of this intraday type of minor volatility, and you're missing out on these type of things. Okay, so so um so the cognitive bias on looking at the bigger picture allows you to stay in the trade. And if you are focusing on the macro picture, which I'm constantly showing with indicators and such, the weekly charts and things like that, then you have the confidence to stay within the trade, regardless of the intraday volatility. And that's where the real money is made. There are no perfect moments in the market, guys. Okay, ladies and gentlemen, none. Only opportunities you can make money off. I don't say this, lightly. I say it because I'm doing it. Okay, I've been doing it for years. Have I taken hits? Absolutely. Have I made back a substantial amount of money after taking hits? Absolutely. Because in my case, this is my living. I got to pay back debts. I got to pay bills, and I got to write my own paychecks. Simple. And if you feel that your passive income, your active income, being your whatever job you're doing, where you're getting money from, and your passive income is what you're trading with your money on the side, then if you want your passive income to grow, then you have to force yourself. You have to force yourself. It's a discipline. It's a discipline to become a tactical trader. Okay? Now, tactical trading doesn't mean you just completely focus on the charts, which is a very important part. But what it also means is that you have to, we also incorporate a fundamental basis to what's going on. So, saying all that, the other piece of great news was that which was posted on the 13th, just prior to the Syria attack, strike move, chemical attack on the chemical plants, was that the House passes the bill to streamline the VOCA rule. That's very, very and look into what the VOCA rule is. It's the heavy restrictions that were put in place for capital requirements on U.S. financial institutions after the crisis of 2000, the great crash of 2008, 2009, 2007, 2009. Banks were put under the ringer. So under the Trump administration, and even prior to that, the VOCA rule is starting to get streamlined. Excellent news. It's market positive. I even put down the word market positive so people can basically sort of boil it down to a cheat sheet and say, okay, is it market positive or market negative? It's market positive. Try to scan the article so you're a little bit familiar with the terms, you understand what's going on. The other great news was over the weekend that the NAFTA deal that is basically U.S., Canada, and Mexico is accelerating. And Wilbur Ross was a terrific negotiator, our Commerce Secretary, and a very successful businessman, billionaire himself, is basically saying that the deal is possible by May. Even the Mexicans have pushed that and accelerated the speed of these negotiations. Why? Because there are major elections coming up in Mexico, and if the other guy, who is the independent opposition candidate, wins, he's a real hard nut. Okay. And he's basically a big time Mexican, pro-Mexican nationalist, and he's going to basically screw up things big time. So we want to get this thing done, make whatever adjustments need to be made. Nothing is perfect, and move along. That's a positive piece of news. The third broad point that I want to make is, that's also part of NAFTA. It says U.S. lowers NAFTA key auto content demand. These are all on my Twitter feed, by the way. Okay, so as I'm showing it to you guys right there. Okay, so this mafioso-looking guy is I believe he's one of the key executives on the on the NAFTA side, on the Mexican side, when it comes to the auto parts. I guess he's one of the union representatives, unions all over, right? So the U.S. is basically starting to water down some of the heavy duty demands they want to make for parts that are coming from Mexico and Canada. So which helps a lot of our auto companies, which have major plants there making these parts. The other, moving on to another thing that was also positive, market positive, was the fact that the U.S. refrains from labeling China and others as currency manipulators. Now, this is a very sensitive topic. I don't want to get into it right now because read up on your own. But we have China does manage the currency. We do too, but not to the degree they do. To weaken it, to make Chinese exports more affordable by foreign importers to buy Chinese goods and worldwide, right? So they devaluate. They manage to devaluate their yuan, renminbi, and so they kind of manipulate the currency to help their to boost their export and their trade deficits. So and their trade surpluses. So the fact that we decided that we're not going to go, we're already in a or at least verbally in a trade war with China. So we didn't want to accelerate and exacerbate the situation, and we decided not to label them, which is a plus. Okay. So these were all these different types of news which came out before the strike, and they are from a fundamental standpoint, from a macro perspective, market positive. Then comes, then we obviously know the Syria retaliation and all that stuff. And so let's move on. What I also put in there, which everyone should read, because this is basically this gentleman, Tony Caldero, who I've been reading for many years, I don't know, 10 plus years. Or a little less. And Tony Caldero basically is a Elliott wave theorist. Now, I am not a specialist in Elliott wave. Okay, I understand Elliott wave theory very well, but he is known as the objective Elliott wave theory, or OEW. What he does, he breaks down all these cycles in the market, specifically in the S&P 500. I do it in a more simplistic, strategic way. He does it in a more technical way, and he gives you the overall picture of the long-term, medium-term, and short-term of what is going on. You will see that a lot of what he talks about is very similar to what I am explaining on my charts. So highly suggest that you quickly scan that and read the Tony Caldero piece when I put out there. Okay, so that's the broader picture. The most important thing coming up in front of us, aside from all these political and and the other political drama with the ex-FBI chief Comey and stuff, is meaningless to the markets. Trust me when I tell you. Michael Cohen, President Trump's personal lawyer, all that stuff, Stormy Daniels, and all that other sensational news does have some relevance, but does not have immediate relevance to what is. Yes, they will move the markets around a bit, you know that, but they don't have a real fundamental impact on where the markets want to go over the short term. Okay, over the short term. So they certainly have intraday volatility when those type of news comes out, but they're not like serious, hardcore, end of the world type of events. Believe me when I tell you. The most important things is earnings. We are entered earnings seasons. We did very well on our bank. If for traders, we certainly did. They all gapped open on Friday, then they gave back in. If you notice, if you remember, and many of you might not remember, every single time bank earnings come out, that's pretty much what they do. They were up a bit, then they rush into the earnings before earnings up nicely, like J.P. Morgan did, and all of them, Goldman Sachs, and then they go up more for the first hour or so. Then profit takers come in. The earnings were solid. They didn't say anything that was, majorly wrong. But as a trader, you captured that move. The Bank of America lottos were up more than 120% from the day before. And from previous 3 days ago, they were up about 140%. These lottos, they're 29 cents to like 90 cents type of moves. So isn't that a great gain? And I know some of you, bank those numbers. It's great. There is, by the way, from a trading standpoint, there is no difference between a 20-cent or 30-cent lotto call or a $3 call. It's a 30-cent calls, simple math. If anyone tends to forget, because a lot, it's numbers kind of fudge people's brains. Buying a 30-cent call, which you sell at 90 cents, is 200% on your money. It's the same thing as buying a $3 call that goes to 9 cents. I mean, sorry, $9. 3 times more, 200% in profit. Or a $30 call, let's say, like a Priceline type of heavy duty stuff, going to 90. Now, when it's a law of numbers, when something goes from 30 cents to 90 cents, it doesn't seem to hit the neural networks in the average person's brain. In a trader's brain, it should hit the neural networks big time. They're like on a scale of like emotion wise, let's say excitement of 1 to 5. For the average person, oh, it went from 30 cents to 90 cents. Oh, whoopee. It registers as a 2. Something goes from $3, okay, to $9. They're like, whoa, it registers as between 3 and 4 from an emotional excitement level. Even though the percentages are all the same, you're making 200% in actual profits. Big numbers, guys. Okay, if 200% return on your ROI doesn't excite you, I don't know what you're doing. All right. Unless you buy one call for 30 cents, all right? It's like, come on, So anyway, but if something goes from $30 to $90, they're like, wow, that's wild. Because if you look at it, this is like a 30-cent stock going to 90 cents. In the penny stock world, that's like a big move. It is a big move. 3 times more, 200% in the bank, in profits, okay? In your actual profits. I'm going to put P. $3 to 9 registers in your emotional basis like 3 to 4. Like, oh, that's pretty cool. That's big. That's great. Something goes from $30 to $90. You think that's like winning the biggest jackpot. It's the same deal. On an emotional level, that's an excitement of 5. What does that mean? That means the law of numbers, as they get bigger and bigger, even though the percentage returns are the same, seem to have a bigger effect as the numbers are bigger, yet it's delivering the same amount of profits. So I never understood why somebody can buy these lottos, 30 cents, 40 cents, 50 cents, 60 cents, and sell them at $1, $1.20, or $2. The same thing happened with Delta Airlines. Okay, we sold within the first opening pop, which lasted about 20 minutes or so in the market. I had basically mentioned it went from the day before, they were in the 20-cent range, 20 to 30-cent range, and they went to 66 cents. These are the Delta Airlines April 20th 55 calls. Okay, and Delta's still going to go to 55, but I'm talking about that 24-hour type of trade. So you position yourself, you bought a couple, you can sell them out at 60 cents plus. That's a double on the money. The previous day, they closed at 27 cents. They opened at 35 cents. And by the end of the day, they were at 13 cents. So I don't quite, and then a member comes in, I don't know, maybe he or she was, was sleeping on the job, didn't see the market open, I don't know what. Said, man, I can't make money on these things. I'm like, what do I say? Delivering 100, 200% type of moves on these lottos, and somebody's saying they can't make money off it. So it's nothing you can do to help that person. What happens by the end of the day is not my concern, because you need to act on the fact that I gave it went higher, you got to sell it. And then if it pulled back and you missed selling it, then you got to sit there and add on the dollar cost average on these type of things. This was the market on Friday, and then sell when it gets up here. So just want to be very clear about this very simple fact. So let's get into the technicals here. With earnings seasons looming in front of us, we start off in a big way with Netflix on Monday evening. We have Bank of America pre-market on tomorrow morning. Netflix will kick off the earnings season, and we'll see what happens. We'll look at the chart. I'm long biased with a straddle, where you can buy some calls and puts. And I think Netflix, even if it falls, is a buy. Why? Because I love Netflix? No, I barely watch Netflix. All right, other than a couple of great documentaries and stuff that they have on Netflix. But every month they're taking my $9 and change automatically, right? So that's not the reason to buy Netflix, but Netflix is on a massive expansion move. So whether it falls $20 or $30, or whether it goes up $30, in which case you obviously sell, take your loot, or if it falls 20, $30, then you basically buy that tactical low. And I'll show that on the charts. It's the same story all the time. These stocks they own their space. Netflix owns its space. Who's Netflix's competitor? Disney? No. Amazon? Not yet. So you got to buy the leaders. So earnings are coming up. There's going to be lots of earnings. Try to participate as much as possible with small amounts of money. And the earnings doesn't mean every single company is going to go higher. It'll be stock by stock. That's why it's called the stock market. Okay. And I think the overall earnings are going to be a pleasant and upside surprise overall, which will help the markets over the short term. So let's move on. So now we get into the technicals here. Any quick questions, anybody? No? Okay, good. So let's keep this brief. Got a lot of stuff going on this weekend, so I need to I spared some time to do this. It's important for all of you guys. So this is what I call the ES tactical chart, and you can clearly see here what's going on. All right, this was from the 10th. The 9th was last. It was basically from Monday or so. Yeah, Monday. 410, 49, 410. 1 second. From last Monday, last Monday started off here. 9 o'clock. Let me see here. Make sure that I'm in the right zone. Yeah, 9:30. This is where last week started. Last Monday started right here. Okay. So you're looking at the face of gorgeous structured volatility, as I like to call it. Okay. So there we go. So bottom line is, the other very important thing I want to point out that as we move along, volatility is certainly going to be enhanced. But given my experience, given everything that I've really dug into on the back end and studied, the level of volatility, enhanced volatility or extreme volatility, in my opinion, will be lessened. In other words, I don't think we're going to get 700 points up within an hour, 400 points down within the same day. Back and forth as much as we have seen. And the outlying VIX term structure, which gives you an idea of how wildly markets will swing over the next month to 3 months, is showing lesser volatility. In other words, I don't expect, given the VIX term structure and what is going on right now, what has happened in the month of March, and is an indication that we are going to get these 1,000 point type of swings within a matter of 24 to 48 hours, back and forth. It's going to be lessened 200 to 300 points. That's fine. It's too extreme for the market to handle 700 up, 400 down, and this type of stuff on a ongoing, constant basis. So that's kind of good news, all right? And some of the big shots who come on the media have also mentioned the same thing, and I agree with them on that. So this type of massive volatility you'll see it lessened. Okay, how about that? But if we trade the structured volatility based on my charts, then in a weird way, you want the market to be volatile. Then you can buy and sell within a very short period of time, whether it be hours or a day or so, and make some very substantial profits because prices swing around big time. Google will be down $30, then within a matter of overnight, a day, it'll be up another 30 to 40 points. So you can make that nice type of gains. So that's, so in a way, if you purely focus yourself on the tactical level, then you want enhanced volatility. I personally don't like enhanced volatility, primarily because it really the time commitment and the energy needed to trade extreme volatility markets is, it's just exhausting. So I personally don't like it. But doesn't matter what I like or not, I'm prepared to face it. And that's what I try to help you guys with every single day. So saying all that, if you look at this chart very clearly, this is where we were at 3 o'clock, 3:15 on Friday. All right, this was last Monday. This is how the week started. At this point, this is the range. The lower end of the range is around 26.25. I don't need to explain that. It's right there for all of you to see. There you go, right there. So I'm going to make this a little bit thicker, so you see that that's major support. That's 50 points lower or so from where we are right now. 50, yeah, 26.75, 50 points. So 50 times 7. This move here is like a 50 times 7. You're talking 350 points, right? So basically that's our range right now, plus minus 350 points, right there from here to here. And from this level here, where we reached on 9:15 on the 13th, on Friday morning, where we were big sellers of things that we bought down here the day before. This was a big sell on the war fears and profit taking, if you ask me. Then the stops getting triggered and this big drop here, which kept, again, as always, most people on the sidelines. Yet they're fantastic buying opportunities. And then this was 3:15 on Friday, and then this was approximately 3:30 right there. Big arrow here on the hammer reversal, zoning in here, right there. And this is what the market ended at approximately. This is what the market ended. 1 second. 4 o'clock. You can see the time down here. 4 o'clock on Friday, the market ended here with the green doji right there. I have some very detailed charts that I put out there. Care to look? If you don't care to look, you're just going to be doing yourself a disfavor, okay? Where I showed where the VIX, there was a VIX, I know trading novice, hit like, which I highly suggest when you guys are looking at the charts, hit the like button if it makes sense to you. I just see the same people who are starting to force themselves to make money, force themselves to learn and trade the proper way. Hit the same like button, and the rest of them are non-existent. Yet I know exactly who's looking at it. Okay, that's the beauty about Twitter analytics and technology. So even though I don't see your faces, I know exactly what you're doing. So there was one that I put right after the market closed, and it was this one. Bother to look, it'll help you. Right there. This was pretty amazing, and I noticed it and I showed it out there. What we do at Clueless Trading is like hardcore, NASA stuff. We're looking to read all the signals, so we're ready. Because you're not going to survive this market without, at least understanding what I'm showing. This happened right around 4. There was an inverted hammer. 1 second. There you go. How do you get this down? Okay. So there was an inverted hammer on the VIX right there, and there was a hammer reversal right at the time of the market close. Right there, hammer reversal off this support line, which I had shown you guys right there at the 264 level or so. 264.61, I believe. How do you get this thing bigger? Anyway, so, and that was a tell what was going to happen. Now you wonder, like, why did that happen? Did they, somebody always knows something, okay? And that's just the way it works. So they probably knew that we were going to gap open 14, 15, 16, 17 points. So they bought right at the end, right there on the last, closing tick, right off these levels. That's why they say technicals precede fundamentals. This is not hard to see. I put a big white arrow here too, just in case somebody was colorblind. If they're colorblind, do they see white? I don't know. So bottom line is right there and right there. And this was in tandem. This is the VIX. So this is exact opposite to what's happening here with the S&P, right? And the SPYs. So you see what the VIX is doing. This is the VIX chart, and this is what happened on 1 second here. And this is what happened right at the opening tick. I mean, a closing bell. So obviously we're not trading the closing bell here, but I just wanted to show it to you guys. Very important. So when it comes to liking something, I don't want everyone to just like everything just because I'm asking them to. I'm just saying that try to educate yourself a little bit. So if you hit the like button, then I know that people are benefiting from that particular type of chart, and I will focus on it more. So it's a way of getting feedback from my members. So try doing that. If you're not looking at charts, well, obviously that's a whole different ball game. I can't help you with. So so this is what we're doing now. This is a very precise. This particular charts or these type of charts are very, very, very precise tactical trading charts. You can trade off these charts. Every line is drawn where we're going, where we're going to fall to if we fall, and where we're going to rise to when we rise. I said we were going to basically get up towards this level here. We broke through it, opened up here, and then when it started to fall after the second candle, it looked very likely that we were going to fall. Profits were already taken. You could have very easily put out a SPY put out there, rode the wave down. Like I said, also very importantly in my post, one of my posts on Friday, you don't always have to wait for me. Some days I took the profits and I don't feel like shorting the market. I'm not obligated by any terms of service at Clueless Trading to trade every single tick, but you can do it. You can do it. There are members, like my good friend and a terrific tactical trader and advanced coaching student, Fish Eyes, does that quite often. So if you see this big red candle developing as I'm showing this chart, go ahead and short it. Buy a couple of SPY puts or SPX puts. Make money. Anyway, so we come down here, big fall, nothing to explain here. It's all written. So all the arrows are here. These are going to be the levels where the markets are going to turn and not turn, and this is where we are. So now we have gapped open here, and Mike asked the question, which was, do we have had a gap open this evening? Will we have to fill that gap before our market takes a direction? I don't know, but if it does, let me show it to you. There is no rule that says you have to fill the gap, but if it does, great. So what he's basically saying, if I understand correctly, this is where we gapped. So if Mike, if I understand your question, and correct me if I'm wrong, are you asking me that do we have to fill this gap all the way down and the futures go just being down to flat before the market opens, before it takes a direction? Is that what your question is? Mike, I'm just answering your questions. You're still there, right? So you're asking me that, we this is where we closed at on Friday. This is where we went to in the past since 6 o'clock when futures started trading. Now we are here. Okay, so are you asking me whether we need to fill the gap down here before the market opens tomorrow? In other words, all this move up. Now we're up 13 plus right now. You're telling me does 13 plus have to be 0? In other words, the market opens flat? No, the answer is, in general, what are your thoughts on gap fills? Okay, I can't answer that. What are my thoughts on gap fills? Okay, that's too vague a questions. Gaps get filled, okay, but not every gap needs to get filled exactly at the same point. Now, we can't just look at a chart and say whether or not to do that. My opinion is that if we go all the way down here, that's not necessarily a positive, okay? Now, if you look at this chart carefully, this is your gap. You have a breakout level right here. I believe that we're going to see this arrow here. My belief is that the market will come down here. The futures will be up probably about 10 or 9 by the time we end this session. 2668, because that was your breakout level, because you have to look at this as a big W. So we almost completed that W pattern. Went back almost to the highs of where we were on Friday morning, where we did some heavy duty selling on things that we bought all the way down here. Okay, so we got there. So this is a W move. And this is currently a what? Can somebody tell me? What is this? Please, someone step up and tell me. What is this?
Handle.
Oh, a cup and handle. Yeah, that's fine. But this is, this is not really a cup. This is a W formation. But yeah, it's a handle. But what is it called? By now, you guys should know this. Yes, it's called a bull flag. That Fred stepped in and said that. This is currently a bull flag. Okay, profit taking. If you're a futures trader and you bought into, and let's say you were tracking Clueless trading like a hawk, you were big buyers of the market at these levels. Okay, so you just made yourself a nice tidy sum of money as the futures open, because I post these futures charts. So if somebody's a futures trader, they can make a ton of money off these tactical charts. I use them as a proxies on proxy and a template on what is going to happen to the market. Yes, it's a bull flag, so they took profits. They just made themselves 17 points when futures first opened. 17 points on the futures. Nice sum of money. If you're a futures trader, you're done for the day. You're like, great move. So this is a bull flag. Okay, currently. It is also a handle because a cup looks like this and this is the handle. So yeah, you can always call it a handle. So if that's the case, then this is a cup. So you can also say that. So that is also a correct answer. But the real correct answer is that this is a bull flag. Now, this is a W formation. This is the flag. The flag is, like I like to say, the flag is fine. The consolidation, the profit taking, profit taking going on, is good till the breakout level here, which is 2668, and from here it should make a bounce. If it completely breaks down and fills this gap, which was Friday's close at this level, it's not necessarily good, but it's not necessarily bad, because that could also be this. More you understand patterns, highly suggest you go back and listen to my chart pattern analysis video that's under new member introductory videos on the Clueless YouTube channel. Listen to Google and look at chart patterns. I have enough videos on the new member introductory video explaining in very simple terms the mechanics of chart patterns, because if you don't understand chart patterns, then you are kind of in trouble. Because I show chart patterns all the time. I explain them too, but if you don't have the basic understanding, then you are not going to survive these markets. All right? The markets are purely technical. Can run away from it. So saying all that, if it does this, and let's say it comes all the way down here, then it should hold this level. One second. It should hold the 2661 level or this 2660 level, because at that point it is in danger of the breakdown down to the lows of 3 p.m. on Friday. Is everyone clear on that? And that is that is an important low. Now, if it falls here and does not hold, this is the breakout level, this blue line, you can see that. That's where the W broke out, right there. So if it should come down here as we speak on profit taking or consolidation flag, right? This is a consolidation flag. There, okay, there's your W. This is your neckline. There's your neckline where where it broke out. So the consolidation flag should on a perfect technical world come down and test the neckline, which is this blue line, and then bounce from here. If it breaks below the neckline, futures traders are going to short the market overnight. They're going to short the market down towards this 2660 gap. That gap should hold. So if we wake up in the morning and see it at 2660, we shouldn't panic, meaning the futures are flat, because for whatever reason, there could be news out of Japan, there could be news out of China, whatever the case may be. There could be a tweet, well, thank God Trump doesn't tweet in the middle of the night. I think he gets some sleep. He normally tends to do it when he wakes up early in the morning. So let's say there's a crazy tweet the first thing in the morning, something to do with, whatever, because the Trump tweets are a risk to the markets short term. All right. He's done a fantastic job over the weekend with the Syria precision attack. I think he should relish that moment and not try to screw up things by, some sort of emotional tweet, because that's what I'm more fearful. I don't like emotional rants from people or from our president. I like tactical rants, like, okay, go out there and say something which is a tactical remark or a tweet. So saying all that, if we break below this line, futures traders will short the market for a good 8 handles or 8 E-mini points, futures points down here. If we break below that, then we're in the danger of testing this. So if I see tomorrow morning that we are breaking below, and that's why these charts are so important to read. If we are, this is a major breakout level. See that right there? Right there. So I'm going to put another arrow here. And that's why I highly suggest this job is actually pretty simple if you follow the right tool, if you use the right tools. It's like you're trying to build, you're trying to hammer down a big nail in the wall for whatever you're trying to fix something in your house, but you're using a small I don't know, like a small butter knife. How about that, to nail that hammer in? It's not going to, nail that, hammer that nail in. It's not going to work. You got to use a hammer. So you got to use the right tools. So simple analogy, you got to have something like investing.com, which is free. And I'm not going to bother asking if somebody's using this. You can use it on your iPhone, for God's sakes, okay? And if you don't, then you won't understand these charts. You can replicate this chart within 10 minutes on your site by going to investing.com and drawing the same lines. And you will see how much it enhances your profits in your trading. So these are simple things that I just like to remind people, because many times I ask people, they're like, no, I don't really use it. Okay, great. Then you deserve to lose money. So, so this is your breakout level. You can see that right there. So that level right here, I should make this arrow a little bit thicker, is an important level. And that level should hold, okay, 2660, which is good enough to close the gap right there. And this is where we are right now. Okay, so this chart can very easily be used, should be used for your tactical need purposes. Going back here, this is an exact, this is the face of volatility. This is what it looks like. And I trade these charts when I'm very active, sometimes during the day, on the long and short side, and I try to inform you guys as much as possible, very effectively, because each of these moves are worth 30, 40, 50, 60%, each of these candles on your spies, puts and calls. Right there, from 3:15 to 4 o'clock, you could have made about 30% plus on the SPY calls. Right there. It's not rocket science. These are big ones. These are the ones which are about 200% or 150%. Okay? So reading candles, no one taught me how to read candles, okay? I kind of self-taught myself, and then I kept on practicing it, and now it kind of makes sense. As we can clearly see here, we're coming down here. Did I just not tell you that like 5 minutes ago? See, right now, it's going on. We're up 11.75 right there. If we break this is your breakout level. Now it's a support level right there. From there, it's going to touch this. How many times have I shown you guys that when we hit certain levels, there's a big hammer reversal? Like here, like here, like down here, It's like I don't want to be like Moses, who has to prove myself 900 zillion times before they say, yes, you're right. So I don't need people to tell me I'm right. I need them to be right. Okay? How about that? So look what's going on. Let me just change the color here. Bingo. So you can see right there. So it should be coming down here as we speak. Okay, so here's your uptrend line. This is a very important uptrend line. Let's make it a little bit thicker. There you go, right? So this uptrend line is also happens to be intersecting the breakout line. See that? This was, what pattern is this? 1 second. And this is not an exercise on pattern recognition. This is an exercise in what we're doing here, in enhancing your ability to trade and make money. That's what we do, Charts are fun when you're making money off them. And if you don't understand charts or keep on doing the same old stupid stuff, thinking, oh, well, market's down, now it's going to be up, we're definitely going up. No, we're not definitely going up. And we're not definitely going down. This is the way markets work. Machines. So I'm teaching you how to read what these machines are doing. So what is this pattern here? This big two very thick lines. What is this? What does it look like? What does this look like? What is this called? Because it's a very powerful pattern that I showed before it happened. And then it broke out over that twice. What is this called, guys? You guys ever? I'm sure all of you guys passed high school and college, or maybe not college. I don't know.
An uptrend wedge breakout.
I'm sorry. What?
An uptrend, a wedge breakout.
This has nothing to do with the wedge. What is this pattern? What does it look like in real life? Forget about technical analysis. What does this look like? What is this pattern? Is this a square?
A triangle. Huh?
It's a triangle, right? Okay.
Right.
So first we have determined it's a triangle. It's not a circle or a square. So what type of triangle is this? And I've said this many times on my I've explained it to you guys many times. I'm not holding anyone to it, but I'm just saying there are two types of triangle. There are many types of triangles. There is something like this. So you guys gotta get this through your head over and over again. Okay, so I'm going to try to attempt to do it again. It's like teaching, you know, sixth grade geometry. No, come on. What type? I'm asking, what type of triangle is it? What? Okay, this is the most. This is the equilateral triangle. All sides are equal, correct? Right there.
Right.
All sides are equal. What is this triangle called? Is okay. First of all, let me walk you through this because I want you guys to understand this seriously. No kidding aside. Even though I'm going to send all of you guys back to pass your 10th grade again, but seriously, no wonder America sucks in math. You know, we're like the number 60th in math in the world. You know what I'm saying? Because even our adults can't understand like basic patterns of geometry. No wonder they're beating our pants out, even though we have the finest kids in the world. Thank God my kid is not a dud in math. Okay, thank God. Okay, maybe he doesn't think that Jay-Z is his epitome of success. All right, I'm dead serious. So I don't want to get into that. I get pretty emotional about it. Okay, so this is it. This is a triangle. We're not talking about that. Okay, this triangle, it does this. If a chart is moving within this triangle like that, as it did here, this is the big one. Was that a bullish triangle or a bearish one? Come on, that you guys can answer because you're staring at it.
It was a bearish.
Holy cow. You're definitely going back to fifth grade. All right. Okay. Now this is not funny, okay? Seriously, you should be a little bit ashamed of yourself for answering that question. How can it be bearish when this is the triangle and we broke out of it twice?
Oh, I was looking at the purple triangle. Okay, I'm sorry.
Okay. No. Okay, I'm looking at the purple triangle too. So how is it bearish?
No, but that's what I said initially. It was an uptrending
It's an
triangle.
so you're right. It's an uptrending triangle.
Initially, and you said no.
No, it's an uptrending triangle. So how is it bearish? It's
No,
uptrending, but you know your answer was wrong. I know you're in the right direction. And that's why we're doing this. And I appreciate you participating because this helps everybody. It's an uptrending triangle, but I asked you for the name of the triangle, so that's why that's why I said you're wrong. Rising doesn't tell me anything. Okay, Trent just answered the question. Thank you, Trent. Okay, and remember, Trent is not somebody who's a genius in technical analysis, but through my service and stuff, he's learned a lot. Okay, and he's learning a lot more. He just answered the question. It's called the ascending triangle. In English, ascending means something that is going higher. What is the opposite of ascending in English? Can somebody tell me?
Descending, Frank. Descending.
Correct. So this is a descending triangle where the chart goes like this within the triangle and then breaks down. This is also known as a bearish pattern. Okay, so this is a descending triangle because the triangle is descending. And this is an ascending triangle which generally breaks out as we see repeatedly. Got it? So this is an ascending triangle. So what we are basically so now we're good with the triangle stuff because this is very important. So this is an ascending triangle which broke out. So these are the breakout levels, right? This is the breakout level. So this is the breakout level. So this move here, we are now up 1150 live on the E-minis, on the Globex futures. Millions of dollars are being traded right now in the Globex markets. And so if we are in an ascending triangle, which we were, it should test the 266 level. You understand what I'm saying? Right there.
Mhm.
Right there. Okay? And that level should hold. If it doesn't hold, like I said, the futures traders are going to bang it down. And as Mike said, that does it have to do it? I said, I don't know. But they will most probably bang it down to getting futures flat, which I don't necessarily want to see. I want to see futures up, still up. You know what I'm saying? So this is where we closed that. So yes, so this is an ascending triangle. So once you break out of an ascending triangle, and here's a small thing that a small trick that you have to know as a trader. When you break out of an ascending triangle, it doesn't just constantly keep on going higher and higher. It goes up, it creates a zone, and this is, I'm just showing on this chart because I show multiple charts, and I'm not even showing you how I read these charts by looking at the internals, which are known as what? What's the simplest internal indicator that I show all the time? And Trent, don't answer. I want people to answer. People,
Stochastic. Stochastic.
That's correct. That's correct, ma'am. Stochastics. Okay, so I'm not even showing the stochastics here. So basically, when I show you the stochastics on this, you will see that when it reached here up 17 about 2 hours ago at 6 o'clock, then the stochastics were overbought on the 15-minute charts. All right. So when it gets overbought, profit taking comes in. Futures are up 11. It is heading exactly now. Now it's at that W breakout level right now. Looking at the size of this move here, it's moving down. So this is actually a great real-time example. Futures are up 10.5 right now. And futures will be up 10 in a few seconds. So in real life trading, let's say you have some time during the day, especially for active traders, you could actually short the market from this level just based off this chart. And you can see here that this consolidation channel now has broken down. So now we're heading right down here. So if I'm trading, let's say for actively on the SPYs, I'll buy some SPY puts once I see this candle, or I could buy a SPY put right here, small amount, and I see it going. I'll add more here, and I'm going to cover right here. And this is in real life. This is what happens during the day. Futures are up 9 3/4 right now. As you can see, this is expanding. There are sellers coming in right there, just the way it happens in real life during the day. See right there. See that? So whoever the futures traders are who basically shorted right here because of this candle, which is kind of a bearish engulfing, right? The body of this candle on the 1 hour thing is actually red. In 15 minutes, it looks as multiple red candles. Shorted here, let's say, not necessarily the top, let's say they shorted here because this was the breakout level. So they said, okay, we lost the breakout level at 26.75 right there. It's already highlighted, this line. Everyone see that clearly?
Yes.
Okay, so you would short that 26.75, and you are right now at 26. I told you we're going to 26.66. And guess what? Bingo! This is like cricket.
But Frank,
Right next. Let me finish. Don't interrupt yet. Look at that. That's your hammer right there. It almost got to that level. Everyone see that? There. See that? Right there. So 26.66. So that person just made 9 points on the short. Just made 9 points on the short right there. As you can clearly see here, right there. Does everyone see that hammer? Right there.
Yes.
Okay, that hammer is 26. Now, this is for active stuff, but I'm just showing you how it actually happens, what the machines are doing, and why these charts are so perfect or close to perfect. So now the hammer. Now it's going to bounce. Now we're up 1050, and you can see that happening in real time. Yes, go ahead with your question.
No, I was going to say normally on the breakout.
Yes. Go ahead.
On the ascending breakout, it normally comes back to test that breakout level, which is what it just did.
You're absolutely correct, ma'am. You're absolutely correct. This, generally speaking, anytime that there's a breakout, the machines want to retest and see whether that was a real breakout or not. Okay. Now,
Mm.
what happens as it approaches the breakout? See, it's doing it right now. It's going to retest it. It's going to try to break it. It's going to try to break it. Now, let's put the stochastics here in gear. This is actually great that it's happening right now because we can see it in real time. So let's put the stochastics here. Bingo. Look at that. All right. This is what I keep on showing all the time. When we got here, when we were up 17, from Friday's close at 6 o'clock, when we were up 17, look what happened to the stows. The 15-minute stows went from deep oversold at 3:30 p.m. on Friday to heavy overbought right here. See that? This move from 3 o'clock to there. So they took profits. Now what's going on? Now we're going back into reset. This is known as a reset. They're resetting the algos from overbought to oversold. Does everyone see that clearly?
Yes, Frank.
Yep. And this happens all the time. Now, is it that easy to look at a stochastic and just say, not really? But generally speaking, in an uptrending market or a downtrending market, these resets will happen consecutively, 15 minutes, 1 hour. And I'm going to show you on this particular session that if you look at the bigger picture, which is the daily and the weekly, these stochastics, which I've showed repeatedly for people who have seen it, they've seen it, and I've shown it repeatedly, they are actually curling higher. So regardless of this, this is like intraday noise happening within 15 minutes to 30 minutes. Now this move down where we lost 9 points in the S&P, what does it do for individual stocks? They plonk it down. Okay, a 9-point move on the S&P handle, E-mini handle, will be probably 3 points down on Boeing, giving you a big name stock, or 2 points down on Goldman Sachs, or 1 point down on another stock. Or if the tech stock, Google, instead of being up $12, maybe it was only up $3 at this point. You get it? So there's nothing to like freak out about. But if you were long from 3:30 onwards or so, or even close to 4, where I said buy the SPY calls, I said that. Look at my Twitter feed. Then even if we open here up 10, 11 tomorrow, you sell. You sell. And then you see how the market reacts. You wait for my tweets to go out there, or you can look at this yourself. Now, what is the other thing? So you can clearly see that overbought. Now we're oversold, and look what it's doing. It's starting to curl. This is not magic, guys. This is mathematical black box trading going on. Okay. Right now, algos are active, but mostly futures traders from Asia are trading the market right now. So they want to make their lunch money. That's what they're doing. It means nothing. It means nothing. That's why these charts are important. It starts to mean something if everything breaks down. So those guys are basically trading the futures market, and people here are saying, "Oh man, what's going on? Was there any piece of news?" No, I haven't seen any piece of news. But at the same time, what do you call? It could be that oil's coming down because oil was going up higher on hopes that there would be a full-scale war and oil supplies from the Middle East would be disrupted. Well, it didn't happen. Okay, so oil's probably coming down a little bit, and that's pushing futures down a little bit from where we were. Everyone understand that part? Because everything is correlated. So, like I said, this ain't grandpa's market, and you guys are doing a terrific job of trying to understand it. All right, it's we can't go on like for hours and hours trying to explain all the different facets that are moving futures right now. But primarily, futures are doing what exactly they should be doing right now here. Now, what is the other than this breakout line or the top arm of the ascending triangle? What else is very important here? The uptrend line. See, that's your uptrend line. So uptrend lines are very important because generally the uptrend line should be held. Why? Because then the uptrend is valid. Does everyone understand that part? So we have a confirmed uptrend line here. We slipped below that, but bottom line is right now we are still above the uptrend line. Very easy to see. So even if we slip below the uptrend line, what we would like to see when U.S. markets start opening for business at 9:30, not the futures market, the actual market. We would like to see it get above the uptrend line, even if we open flat. If futures open flat, we're up 10 and a quarter. If futures open flat, what we would like to see, what I would like to see, is a retest of this. This is another support line, by the way, and we would like to see this. Now, this is why is this good? What's great, and this is one thing I want to mention to everybody. The best days in the markets are when the market opens lower, stows and all that get oversold in a big way, not just on the 15-minute, but on a longer frame, like 1 hour, 4 hours, and then they start turning. Why? Because it gives all of you and me an opportunity to add more, or if we don't have a position, to add new positions at a cheaper price and make money. The worst days in the markets are when you guys don't have a position prior to a big gap open, and then you're fuddling around trying to get excited and buying when the markets are basically on a sell mode. That are the worst days. In fact, the worst days in the markets are for people who don't have positions prior to that, when the markets open up, gap open 200-300 points, the Dow Jones, and the futures open up 20-30, S&P handles higher. Worst days in the markets for everybody. Why? Because then you don't know what the heck to do. And if you're being silly and chase prices, you're getting smashed. I don't need to ask anybody, but I'm telling you that's the worst day in the market. The best days in the markets are when futures open down, okay? And then you can basically buy some certain tactical levels, not blindly, but I'm putting together the select trades and the charts and all that stuff. You look at some of the stocks you like, whatever the case may be, and you buy them at these lows, and then you see the market turn as the day progresses. Those are the best days in the market, okay? The worst days in the markets are futures gap open, bang, up here, and you have literally zero long positions. You have nothing to sell. So what's there to get excited about? Simple, guys, but facts. All right? So look, this is what we're doing right now. And let's see where we go. All right, so enough said about that. Now, if the uptrend line is going to hold by tomorrow or so, which I think I don't know, but the long-term charts are saying that we are going to go higher, then we are going to. So now, and by the way, who said it's a handle? Was that Nia? Who was the person who said, when I had asked, like, what, and then Trent said it's a consolidation flag. Who said it was a handle? Nia, was that you? Okay, who was that? Exita? Who was it? Nix?
I said a handle, Frank.
Okay, so you were right, because right now it's starting to look like a handle, because if this is an overall cup, this consolidation is starting to look like a handle. See that right there? Because as it fell a little bit more, it is more like a handle, even though it's a consolidation flag. So I wanted to sort of validate your point at that point. All right, so there we go. Now, if we okay, one of the reasons, okay, okay. Now, if you look at the channel, you will see that it points out towards 2704. One way or the other, I believe, even if we do this, or even if we slip and do a triple bottom here, because remember, this is the downtrend line too, right? From here, even if we do this, what the bulls would like to see, and I'm more long biased, so I would like to see, even though I don't mind shorting if I see technical breakdown. And that's another thing about technical analysis. You can change your mind based on the charts. So it doesn't matter, okay? I could get tactically bearish, as I do certain times, because the charts are telling me to get bearish, all right? So saying all that, what we would like to see from the long side is it go back into this uptrend channel, and this is your acceleration channel, this one, and go above the 2680 level, because once it enters that, we call it the bear kill zone. It will move very fast towards 2700. Now, the other line that I have not drawn, and I'm doing this in front of you guys, is one second, is this. There we go. It's not as accurate as, yeah, I'll take that. There you go. Now notice one thing here, ladies and gentlemen, okay? And this is very important. And this is giving me a very definitive idea of what can happen if the market basically holds the uptrend channel and where it can go. Both these lines, this one and this one, ends at 2704. See that? So that is very, very important to me. This channel that you're looking at, this is known as an acceleration channel. This is when the candle started to accelerate. You see that? Right there. Right there. The thin one. Just want you to understand how these charts are drawn. This is your broad channel, which we have already explained. Okay, so in between is an acceleration channel. We lost that acceleration channel when we went below the gap. See the gap? You guys understand that part, right? And this is not just exclusive to markets; it's exclusive to stocks too. So at this point, if we basically get back into here, we're gonna break out, break out over Friday's highs, and at that point there's going to be a fast move, zigzag of course, but fast move towards 2704. Everyone clear about that? Does everyone just So one of the tricks about understanding patterns and stuff, aside from understanding the basic names of the patterns, is that you will see them happen repetitively, and the more you look at them, the more it becomes normal. Meaning, like, okay, you see it. Like I see it. I told you this was going to happen, and it's happening right there. There was your breakout level, your neckline, right? This line here. I'm going to change the color. Let's say I change the color to green. There was your neckline. How about I change the color to put some bling in it? Okay, how about this? All right, and make this a little bit thicker. There you go. All right, so there was your neckline breakout on the W. That's your breakout. Guess what? It hit the top of the ascending triangle, and it's now trying to go up. Futures are up 11 and a quarter. By the time we end this session, we could very well do this. We'll come back and revisit it. How about that? Now, was this helpful to you guys? Like to see it in real time, this stuff that's going on?
Yes, Frank.
Yep. So whether we're sitting here in the United States, or whether they're trading out of Tokyo and Shanghai right now, you know what they're doing? They're trading Clueless trading charts, guys. Literally, that's what they're doing. And and futures traders, by the way, are some of the biggest gamblers in the world. They have a lot of them, and the best ones are the ones who trade off technical charts. Just like retail traders, some of them are emotional and some of them are very tactical. And the tactical ones are trading it like this. So futures, when you see them moving around like crazy back and forth, it means nothing. They're not smarter than you. They are faster. They're trading from overseas time zones when you're sleeping. And that's it. But if you have these charts, you know what's going on. So let's move on. So you can basically what it comes down to is here's your lower channel. Here's your upper channel. And we shall see what happens. Let's move on to a second chart, which is this one. Now, this one is very, very important, which I've been showing repeatedly and telling people, please look at it repeatedly. And if you've been doing this one, then you're making money. No question about it. Okay? So what is this one? This is the daily chart. This is the daily chart. I repeat, not the daily show. This is the daily chart of the S&P of the SPYs. I have shown the daily chart. I'm going to show the daily chart of which you have seen already. I'm just showing you the charts and explaining this more. I kept on saying that regardless of this intraday fluctuations, which you have to manage your profits, but overall, we are going higher. Because the stochastics were trending higher. The stochastics bottomed, believe it or not, way back on the 25th of March. Wow, seems a long time ago. right? 23rd of March. There. Look at this. Look where the Stowe's bottom. Since then, we have had intense volatility, but the stochastics kept on moving higher. Now, we're small fries in the game of, of what the markets are doing. So it doesn't mean you keep on, you bought here and you will never sell. You get to buy here, you get a 600-point move like this. What, you're not going to sell? Of course you're going to sell. But what I'm showing you is the overall directional bias on the market. The stochastics kept on going higher. So basically what that means is that these dips were buyable because the support held and the stows kept on moving higher. That's what it means. That means that these, when I showed like buy these lows in the market, they were justified and validated by the daily stows climbing higher, because that means there was underlying strength in the market, and these type of these type of big dips were being bought. That's why I drew this line. It's the uptrend line. And look how perfectly it kept on hitting the uptrend line and going. So many days later, when we hit another 1,000 points lower, the stows were still higher than where they were here. What is that called? And I've mentioned this many, many times. What is this pattern called? This is a falling wedge. I know that. That's not what I'm asking. What is this type of event called when the stochastics are moving higher, yet we print a lower price on the market?
A positive divergence.
That's right. Thank you very much. A positive divergence. A positive divergence. Positive divergence on the daily charts. This is a daily chart. Take a day or two to play out. It doesn't matter what happens in an hour. So instead of completely panicking and saying, I'll never buy the stock market again, smart money, and we did too, we bought the tactical lows based on the charts. Whether they be a hammer reversal, big one, on the 2nd of April, whether they be these type of hammer reversal, maybe a bullish, massive, this was a bullish reversal. This was the biggest one because we opened down and then we ended the day up here. That is one fat bullish engulfing candle. What does that mean in simple English? Billions of dollars went into the market. Short spot, bought back their shares, and the longs went in hard. That was very positive. The next couple of days we went up here. We hit this resistance level. We pulled back a little bit. Next day, which was the 6th of April, we pulled back hard. There was a red candle. Now, why is this not that scary? Two reasons. Number one, and I've explained this, but I'm now explaining it again. The stochastics kept on going higher. Number two, the body of this candle stayed within the body of this massive green candle. So the biggest money that bought down here never left the market. They traded around it, but they stayed within. They kept the bulk of their money because the size of this red candle was still well within the body of this big blue candle. That's known as an inside day. Understand what I'm saying? This is a candle, and it's like a little baby sitting in the tummy of this candle. That's an inside day. Next day, boom. It opens up a little bit from where we closed at, inverted hammer. Not a good candle structure. Inverted hammer, we know very well. Basically, money went up, and then we don't like inverted hammers if we are long. We like inverted hammers when we are short. Everyone understand that part, correct? Yes? If somebody doesn't understand this basic concept, please.
Yes, Frank, we understand. I understand.
Okay, you understand. If anyone doesn't understand, please step up and say it, because if you don't understand these basic concepts, you shouldn't be a trader. I know I might lose you as a member because I'm saying it, but you shouldn't do this. Okay, you might want to go there and gamble in Vegas. All right, pull some slot machines, play some poker. I don't know, whatever. Okay, but these are very specific signals that can tell you when to buy and sell and make money. All right, good. Everyone understands a good thing. So this is not necessarily good. But what happened to the stows? The stows came down, but they still kept on going higher. What more can you say? So over the next following days, the market chopped around, but they kept on going higher. And then they hit a big fat downtrend line on Friday. On Friday the 13th, they hit a big fat downtrend line. Now we managed to get over the downtrend line during the day, slightly we did, but this is a major downtrend line. Let's make this line thinner. Yes, we hit it exactly. So that's a major downtrend line, right? Purely from looking at these candles. So does that mean it's the end of the world? I don't think so. This is where the difficulty in reading charts comes in. This is my job of putting my 2 cents across. I think it's standard procedure that when you hit a downtrend line that you're going to kind of hit the skids a little bit. It also happens to be that I mentioned this too, that 267 on the SPYs or 2672 on the S&P is where 2018 started. So basically for the year, believe it or not, when you hear some real bearish guy tell you the market's really overvalued, everyone's just going crazy buying stocks. Yeah, that's great. Everybody's really crazy buying stock. I don't think so. I don't see anybody in my chat room most of the day, which is fine with me. Okay, like I've said, it's very quiet in there. It's like a library in Arkansas when nobody goes. All right? Why should I pick Arkansas? I'm sorry, okay? To any residents of Arkansas, like Blake Hilton, he was sitting in Harvard or wherever he was in Oxford, right? So bottom line is that people are scared. Retail investor sentiment is very, very, volatility has created mush out of people's brains. The retail investor is not putting a single dollar in overall direct involvement in the market. Perfect. Okay. So bottom line is that this is it's a nervous period. Okay. Period. All right. I don't really care because I trade charts. So at this point, you see this gap here, which is exemplified in this beautifully nice pastel green color, like your spring curtains or whatever you do, your picnic plot. Well, that's the gap. That gap is going to get filled. One way or the other, they're going to fill that gap, in my opinion. Now, we are overbought, but overbought doesn't mean that on the day that you get overbought, you just start to crash down, okay? Here we were overbought, but we went up for another 2 days, and then we started to come down. And that was of much higher levels. You see that? Look, we're not, so bottom line is, this is the point where it has to be watched very carefully. If you're just trading off this chart, I'll show you other charts will tell you that we have more room to move. So this is the point where there is going to be resistance, and it's right at the downtrend line. Now, this gap will get filled, and that gap is 269, 270. So that means the market is going to where is my SPX chart? Hold on one second. I will show you SPX. So far everyone's with me on this stuff because it's very detailed. Is everyone with me on what I'm explaining?
Yes.
Good.
Yes, Frank.
Okay, good. All right, now, this is your S&P chart, not the SPYs. Same stuff, but the real, the real McCoy, as they call it, the real deal. All right, S&P. So these things that I'm drawing here are all gaps. Most important one is here. Okay. I'm getting breaking news, but that's all about the Comey book and all that stuff. He's playing his side of the story. So let the mudslinging continue. I'm not really bothered with it. So that's the breaking news, back and forth. Okay, so here's a gap. Now this is a very clean chart, guys. So this gap is going to get filled. You can see here the same story with the stows. And this gap is, I've said it repeatedly, is 2,700, roughly 2,700. Didn't I show you on the first chart that we're going to go to 2,700 or around that level? Where is it? Oops. This is the one. Hold on. 2700. So 2704 translates to what on the SPX? It's 4 points lower, right? S&P E-minis. Sorry, it's around 2700. Same thing. Where's the chart? Oh, but there you go. So this is where we're going to go. So if you're looking, so we closed at 2656. Please do the math. This is how you make money, not like any perfect moments. And we're going to go to 2700. And I say that it happens within a matter of a week. Okay? Because obviously it's not going to take years. You know, things happen so fast. That's 44 points. 44 points in the S&P times roughly 7. I now use a factor of 7. 300 points. So from here to here is 300 points. That can happen on one single gap open. And right there, we have a major roadblock. So you probably get a pullback. And where does the pattern get fully completed overall? Can somebody point that out to me? Okay, where is full pattern completion? Okay, I don't have time, so I'm just going to explain to you. All right, this is your first gap fill. This is your second gap fill. This also happens to be a major downtrend line right there, Okay, so 2740. I believe the market's going to 2740 in the month of April. That's my opinion. Okay, based on the charts, and then we'll refine and update our opinions and our forecast based on what we see going on. But at this point, on the S&P 500, this is a very, very bullish picture. This downtrend line, we broke out of it nicely, and this is where we closed at. But overall, when you look at this, and I had asked this on the previous webinar, when you look at this picture here, does it look like it wants to go higher or lower? This pattern that we're dealing with right now. And just answer what you first see, what your brain first tells you when you look at this part. Hold on. Not there. I'm just trying to. Oh, come on. See, it takes time to construct these charts, and I'm doing this all day long for you guys on a real-time basis. So I've gotten a lot faster, but it still takes time if you want to draw them properly. Oop, this was already there. Okay. Quick question. I just need a 2874 is full pattern completion. Yeah, that's way off. Way off. I'm not even thinking 2874. You won't be even around at 2874, dude. Okay, so it ain't going. I don't think the market's going to 2874. Okay, in the month of April, no way. And if it does happen, great. Okay, but I think that's a way too bullish. And remember what happens, Trent, when you get way too bullish. Okay, when you get way too bullish, it's time to short the crap out of the market, because all those wowzers in there. Okay, when those are the first signs of retail sentiment euphoria. So always be more, like kind of flat. Don't get too bearish, because at this point, most members are way too bearish. So don't get way too bearish. Certainly don't get way too bullish. Way too bullish is actually very dangerous, guys. Okay, just so you know that. So saying all that, the first pattern completion is here. Play increments. Oh no, that's 300 points. Second pattern completion is here, which in my opinion is a very powerful one, because it's attacking a very powerful downtrend line from the highs. This was the highs. This was the all-time highs in the market. This chart you guys should print it, copy it, just look at it. Just trade this. I'm giving you money in your pocket. Okay? This was your high. This was 2018 when it started. Okay? This is when retail money went berserk into the market. What we called, does anyone remember what we called this wave? What was it called? Let's see if anyone has any memory left. What did I call this wave? where it was just like too many wowzers, and now what was it?
Wave 3 or
No,
wave 4, one of them.
no, you're just making things up. It was called Wave 5. Okay?
Oh, wave 5.
Yeah, this was Wave 5. When everybody wanted to be in the market. Wave 5, all right? This is when the chat room's very full. Everyone's just like thinks it becomes easy to buy things and just hold it and just make money every day. Wave 5 is the most dangerous wave. And you guys learned it the hard way. You guys all learned it the hard way. That's the reason why, let me finish. And you all deserve it. That's the beauty of it. Now, you're going to take it as a sad point in your life, or are you going to look at it as an opportunity to learn and make a crap load of money? So your Wave 5 euphoria, I'm not pointing at anybody, is when the highest amount of retail involvement in the stock market. And it's also shown by the amount of money, 23 billion that went in. Now, overall, it's still a very low number. So from Wave 5, we went to Wave 0. Most of you are nowhere to be seen. Hiding in bunkers, ordering a whole bunch of diapers, big boxes of them. Okay? Never responding to any of my questions, whatever. Not making money on these big 4, 5, 6, 700 point moves. Doing stupid things like selling on a 15-minute candle, getting out, seeing the same stock go up $30. That's what happens at Wave 0. This is where most of you guys are. You guys are at Wave 0 right now. Forget Wave 5. And the beauty about the market is that in order to get to that euphoric stage of Wave 5, it's a long way off. What does that mean? That means the market will grind its way higher because most of you will still remain in the bunkers and keep on not trying to make money off the markets, which we are doing every single day, almost. So it's a very positive environment from a sentiment standpoint because the majority of you have gone into Wave 0 from a Elliott wave theory standpoint and from a sentiment standpoint. Now you can sit there and mope and say, oh my God, this and that. There's no oh my gods in this business. There's no OMGs. That's good for your iPhone emojis, okay? It's a very tactical market and you can make a lot of money, but you have to do it the right way. Now, in this type of volatility, one thing I do suggest is that you don't pile in too much money into any one stock. So whether Netflix goes up 25, 30 points, which it very well might, you want to sell it right away. Reevaluate, get in there. Same thing's going on every single day. Netflix has been a huge winner for us. Tesla's been a huge winner for us. And that stock has potential to go to $350. Okay? There were multiple winners. I don't even get into it. Just go through the Twitter feed. Nvidia's been a huge winner for us. Okay? Google, Facebook. Facebook was supposed to go to 0, right? Because all of you deleted all your lovely Facebook pictures and never talked to your, long lost aunt, somewhere out there in Mars, who still keeps in touch with you through Facebook. Of course not. Facebook is doing fine. Stock made, many new high for the week. So anyway, so sentiment-wise, investors and traders are at Wave 0. All right. So the good news is that this is where Wave 5 will come in again. Exactly where, believe me when I tell you. When we break out and the market's rushing towards that level, which very well couldn't happen, okay, it's not going to happen in 1 or 2 days. But once we break this uptrend, this downtrend line, this wave, instead of Wave 5, let's call it Wave 5.1, more modified version comes into play. Retail mom and pop, and many of you are going to feel good again. And you know what you're going to do? You're going to kill yourself again, because right there, off this gap will be monster sell programs. Monster, like a tornado, it'll hit. I'm not even looking at that level. I am simply looking at here and here, the number 8, right, as where we can go to. Forget about this for now. That's the beauty about technical analysis. We take one step at a time. This is a major resistance level. Big crash sell programs went into play. This is when mom and pop said, "No way. I love America. I'll wave a $1 flag, but I'm never going to buy an American company." Great patriotism, right? Good job, guys. 2,800. So 2,800 is a massive resistance level. But why worry about 2,800? Because I don't even know if we're going to go there. The pattern says, yeah, eventually climb up there, but I'm not, I don't know. All I know is that if earnings are really strong, we can go to 2,740. And for 2,740 from where we are right now is almost 90 points. 90 times 7 is 630 points in the Dow. From here to here is 300, and from here to here is another 300 and change, 330. That's all I care about at this point. Filling the first gap and the second gap. Now, in the meantime, can the market do this? Absolutely it can. Can the market come and retest 2530? Sure it can. But this is what we're looking at right now. Any questions, please? And please feel free to ask any question you want, because most of you are at wave 0 mentally right now. And I really don't want any of you to ever go to wave 5 before your stage. That's the most dangerous things for you. For me, I don't care. But for you guys, that is the most dangerous phase. And many of you know that firsthand. And that's the biggest lesson you'll ever learn. And once you've learned that lesson, and once you understand these charts, you're on your way to making money consistently over a period of time. And hopefully big money. That was the biggest lesson. And you are now learning it through Elliott wave theory. So don't feel bad about it. Use it as a learning experience, which has been beautiful. Yes, lost a bunch of money. So make it back up. Questions? None? Good. Let's move on. So I'm going to show you very quickly on the S&P chart what's going on. This is very important to all of you and to me. This is your weekly chart. Very, very important. Concentrate on the full stochastics. It is starting to turn. Does anyone remember? And if any of you do, seriously, I'll be highly, highly impressed. I put the same chart off, and I'm pulling it out on the Twitter feed on the right side, which also showed the correlation with the stochastics bottoming and what happened since 2009. Does anyone remember that? SPX Weekly. Somebody said, no, I don't remember. So just say it. If you don't say it, I can't show it to you. All right, fine. I don't have time to waste. Okay. Real simple. This is your chart. Okay. And why isn't this chart expanding? 1 second. This is the same chart. Okay. There we go. Every single time, this is going back to 2000 and I even wrote it down. This goes back to 2018, 17, 16, 15. Okay, it goes back to 2015. I'm highlighting the years. So this is 2017. This is 2018. Okay. Every single time, this is the uptrending channel. This is the uptrending channel. You use Thinkorswim, pull this up and just put it up like that. Uptrending channel on that. And every single time that we hit the lower end of the channel, we hit the lows on the stows. And that's why I highlighted with some white bars. Very important, guys. I don't care how busy you are. Tell me long-winded stories how busy you are. I'm like 20 times busy than most of you guys. Believe me. All right. I sleep 4 hours a night, and I get up and I try to sleep again a little bit, and a heck of a lot more busier. Okay. Trying to put some real content out there after the market, during the market, before the market, these webinars, so you guys can be helped. So I don't want to hear like how busy somebody is. I don't want to keep on hearing the same old excuses. All right. You can always study these charts after the market. And if you don't study these charts, you have no freaking clue what to do. So wake up time, guys, all right? So So here I took the time and energy to show this chart where I highlighted, using these, white dashes. Every single time that the markets hit the lower end of the channel, what happened? We went significantly higher. I even pointed out where the 20-day moving average is, where the 50-day moving average is, and where we can go to. So bottom line is, every time we went on the low end of the stows, just the way we are now, going back to 2015, not even like now, like 2015, the markets hit a intermediate term bottom. This is a very bullish chart. Is it going to play out? It very well might. So it hit a intermediate bottom. What happens with intermediate bottoms? Weeks and weeks of the market going higher. Weeks and weeks of the market going higher. Every single candle is a week. Anyone having difficulty following me so far? Seriously, is anyone having difficulty following me on this weekly chart? Because this has been okay. So next time, just for your own sake, all of you guys and everyone who's going to listen to it, just study these charts. There you go. Okay? This is significant. We went to the bottom of this thing, of this uptrend channel, going from 2015 or 2016. This is 2016 actually. Yeah, 2016. All right. And just when I drew this chart, I'm like, wow, because unless I structure the charts, I don't get to see the full picture. And I said, wow, look at this. Are the uptrending, the 50-week line, the 34-week line, they're still uptrending. Okay, that's good. But look how we kissed the bottom of the chart, of the uptrend line. To me, this is like magic. And then 1 week we had a red doji, and this is the second week that we ended last week. And this turn. So if somebody's following the bigger picture and just sticking to their intermediate term swing trades on the markets, then they're good to go. Every single time we bounced off these levels and there was a multi-week rally. Now, do I think the multi-week rally will continue for weeks and weeks and weeks? No. I think we're going to hit that uptrend line, which is around 2740 that I just showed you, and we're going to hit a major roadblock, and we'll see what the market does after that. We did that here. We went and hit the downtrend line, and we gave back. Most probably it's going to happen again, and we're ready. And by the time mom and pop get excited again, time to short the crap out of the market. And the machines do that all the time. What I don't want you guys to be is ignorant as mom and pop when it comes to the markets. That's why you're listening to this and hopefully trying to focus a little bit more. Because if you're as ignorant as mom and pop out there who have no idea what's happening in the market, then that's a shame. So the weekly charts are positive. When we look at the same chart on the E-minis, okay, let's look at the daily. The daily charts are getting overbought. They're getting overbought. Now, what are the lines that we are looking to get over? Because this is a real test of what's happening. The line we are looking to get over is 2690, which is the 34 and the 50-day moving average. Is everyone with me on that? So when you hear all the pundits on TV and the little voices in your head, not knowing what the heck the market's going to do, let me tell you what the market's going to do. I don't know if the markets will be able to get over this powerfully downtrending 50 and the 34-day moving averages at 2690. But I don't care, because I know that if we get to 2690 from here, we are going to be up roughly 34 points, which is roughly about another 200 to 250 points, around 250 points. And there's a gap, which I've shown you on multiple charts. So 2700, let's say, is what we need to take this gap out. In my opinion, we'll most probably will hit this. We will create this is an exact cup, Nick. And that cup will probably pull back a little bit, and that pullback will move up and hit 2750. If 2750 breaks higher, then we are looking at 2800. If 2800, which I think is formidable resistance and a big shorting opportunity in my opinion. Big. Will it happen that we hit 2800 and we do another massive dive down like this so it looks like 2800 here, another one? Absolutely. Absolutely can happen. And that, if we hold that line, the down uptrend line from 2015 and these levels, will be the ultimate buying opportunity, because after that the bears are going to say, man, we tried everything, but they're not going to break that 2500 level. They're going to hold that. That's the Trump put, right? Like, okay, that you buy both hands down, because most of the times you guys were non-existent. Elliott wave theory sentiment zero, buying these type of dips in the market, most of you, which is very sad if you ask me. Okay, don't let the machines make you into a vegetable. Beat the machines like we do with these charts. Okay, the biggest tragedy in life is when you're defeated by a black box, a algo HFT algo, despite the fact that my charts are telling you what these things are going to do. That is such a sad fact. Don't go to bed thinking these machines just beat me into a pulp. I can't think anymore. Because that's what most retail traders are thinking. Oh, it's crazy out there. That's a stupid term. What do you mean it's crazy out there? It's volatile out there. It's not crazy. It's structured. You can see it. I'm showing it to you every day. Anyway, enough of that. So bottom line is that at this point, the 50 and the 34-day moving average is still pointing down. If we can break above that, which I think we will, we're going to basically bust a move up to 2750. And then you're going to get big sell programs. Will the sell programs go all the way down? I don't know. I'll be able to tell by looking at the STOs. The STOs are fine now. They're up in overbought, but they're not like crazy overbought. Crazy overbought is about 100. Okay? So that's it. So it's all there for you to see. Now, this will be determined by the set of all these earnings, which are going to be going on for a couple of weeks now. All right? We don't know yet. Somebody who's really always bullish and just like crazy bullish will say, oh, yeah, we're definitely going up here. I have no idea. I think it's a high probability move that this downtrend line will be retested, just the way it got retested here and failed. And we'll see what happens after that. Because the weekly, because this is the daily, right? The weekly, just to remind you all, and this is how we're going to end this session, is still telling us, one second, that we are just about to turn. And when we turn like this, we generally tend to be the onset of a multi-week rally. Read my lips, read the charts. We are the onset of a multi-week rally. And that multi-week rally, in most cases, lasts 1, 2, 3, after the third week, a minor pullback, 4. 4-week rally. It starts off here at wave 0 when nobody wants to touch any stocks and continues for roughly 3 to 5 weeks when it gets overbought. Always like that, guys. Starts off here at the bottom. This is actually a lower bottom. I like it more. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. Whoa! Because the stochastics moved up and continued sideways. That is powerful. I don't even know what the heck this one's going to do. All I know that it will try to cross over, and once the crossover happens, it will be up here around 2800. In the meantime, you can still make real decent money. That's your long-term view. In the meantime, the stock market's still in a downtrend. If you look at the overall picture, it's still in a downtrend. The downtrend is only broken if we go above this line, 2750, and I would, for safe measure, I'd say 2800. Over 2800, this downtrend in the market is broken, and we're going to S&P 3000. But till that happens, we have no idea. All we're doing is playing a couple of 100 points, which is very decent money. Very decent money. Questions before we wrap up? Anyone? Yes? No? So in conclusion, earnings and the political atmosphere and some of the global stuff that's going on will determine. There's always reasons why the market, does what it does, right? That's going to be creating a lot of noise, presidential tweets, things like that. And the other thing to keep in mind, which I forgot to mention, this lovely yellow line is the 5-week moving average, right? That 5-week moving average, ladies and gentlemen, needs to start to change direction. And you can see here, the 5-week moving average in general was never diving like this in the previous occurrences. Yeah, it was diving. I changed my mind. Yeah, it was diving. So by the time the 5-week, once the 5-week moving average turns around, you got another 3 weeks of a powerful rally. At this point, I'm not seeing any turnaround. Are you guys on the yellow line? No. On the daily, yes. On the daily, look, that's a damn good sign. 150 moving average. That's what the markets are doing. So on the daily, the 5-day moving average, which is what traders rely on a weekly basis, is curling higher, which is a good sign. What's a bad sign is the 20-day is still pointing down, and the 34 and the 50-day moving averages, which I explained repeatedly right now, needs to basically stabilize and start to move higher. That'll only happen over 2,700. That's called reading technical tea leaves to the teeth. All right. So on that note, I wish you all a great week. Get off the mat. Get off the wave zero of Elliott wave sentiment theory, which most of you guys are in right now. Be involved to a certain degree. Don't go nuts on anything. And at least take some of the trades. Don't make excuses to yourself, to your family. Walk with your head high. All right? Don't be a quitter. I love you all. See you guys tomorrow. God bless the United States of America. Good night.